Millions of buyers are sitting on the real estate fence because they're waiting for the market to turn their way. But at the end of the day, you're ready to buy a house when you're ready to buy a house. When your walls are closing in on your growing family, or when the house is too big because your kids have moved out. When you're sick of paying someone else's mortgage, or when it's time to retire somewhere new. Buyers can't wait for a market shift. They need a clear path forward and wisdom from real people. That's where How to Buy comes in. You'll join me, Leo Ansoliaga, as we hear how to buy stories and advice from real buyers and the professionals who help them along the way in mortgage, real estate, insurance, financial planning, contracting, appraisal, and so much more. Now, let's jump into today's episode. Today, we're talking about something a little different, Bitcoin. Now, before we dive in, let me be clear. This is not an investment advice or a recommendation to buy Bitcoin. This is simply a conversation with someone who knows the space well and brings a thoughtful, grounded perspective to it. Joining me is Mike Casey, a certified financial planner who has spent years helping clients navigate traditional financial planning, and who also happens to have a strong understanding of Bitcoin and the evolving role and play in today's wealth conversation. Whether you're curious, cautious, or already deep down the crypto rabbit hole, Mike's insights will help you think more clearly about where this fits or doesn't fit into your financial life. Let's get into it. Well, it's a real treat to be joined by Mike, one of our business partners, a financial advisor in the DC metropolitan area, and someone that I've had the privilege of meet, but also hear his story, his approach as it relates to helping his clients manage the asset side of the balance sheet. Mike, thank you so much for joining us.
Hey, thanks for having me, Leo. Really glad to be here.
Mike, you and I have had some incredible conversations, not just about the industry at large, not just about, investing in real estate, investing in the secondary market, but some very unique conversations about things that perhaps people have not thought about. And so I guess before we get started, why don't you tell us a little bit about your practice? Tell us a little bit about how you got started in this world, and maybe tell us a little bit about some of the things that make you and your organization unique.
Okay, yeah, I appreciate that. I focus on defined outcome investing, where we take a structured approach. We're trying to meet specific financial goals with a little bit more predictability and what we call risk management. So with defined outcome, you can, within certain guidelines, you can set your return, your expected return, and you can also choose approximately how much risk you're willing to accept. So there's a lot of people don't know that this is even available. It's been a big part of my practice and adds a lot of value to the client's portfolio, especially when they have peace of mind knowing that the daily ups and downs of the daily volatility in the market are not going to affect their portfolio. That's a big deal. So also, I've been an early Bitcoin adopter, and I was one of the early CFPs to actually recommend Bitcoin in clients' portfolios. It's a new asset class. It's exciting, has huge momentum, major institutional adoption, as well as individual adoption in retirement accounts and investment portfolios. So I like to include an allocation of Bitcoin in with, I think every client should have some allocation. Now, it's going to depend on their unique situation, how much, but it's an asset class that has major implications coming down the line.
Yeah, I mean, and I mean, what a unique value proposition, within your industry. I find it that, most advisors that, are serving clients usually always have similar, approach or similar stance on various things. You guys talk a lot about holistic planning. You talk a little bit about, mitigating risk, et cetera. But yeah, I mean, one of the things that really intrigued me about you in one of our meetings is your exposure to Bitcoin and how a knowledgeable you are on the topic, b how you've obviously not only allocate a portion of clients portfolio towards Bitcoin if they so choose to, obviously, but most importantly adopted this yourself personally, right? And so I guess as we start this podcast, maybe like talk a little bit about that, because we've had some long chats about A, the misconception of this asset class, B, some of the concerns, that people have in the industry around this, but also C, perhaps, one of the missed opportunities that clients are perhaps overlooking right now. We're not giving obviously financial advice here on this podcast, right? But just holistically speaking, like how have you seen that evolution, as it relates to this particular asset class in your business, in your life, and obviously in your client's portfolio?
Yeah, so it's evolved. Originally, I couldn't recommend Bitcoin early on, even though I dabbled. I was an early investor. It was a speculative investment at best. But as I learned more about it,
Mhm.
and as I saw the adoption grow, globally, it's a worldwide asset. I realized that this has major implications.
Mhm.
Um, and then I also saw how the status quo wasn't really serving people. There's a lot of younger folks out there they can't buy their first house.
Mhm.
They're having trouble paying off debt.
Mhm.
The money just doesn't have as much purchasing power as it used to have. So people are, working harder and harder, um, and they don't feel like they're moving up. And so, Bitcoin is a non-inflationary asset, so it has really powerful implications for being able to maintain your purchasing power. Um, so just over time, as the adoption increased, and I see the benefit that it adds to portfolios. I think I showed you the just with a small allocation to a really standard moderate portfolio with just a 5 to 10% allocation to Bitcoin. It really transforms the entire portfolio. Um, so you don't have to, no one has to go all in. We're not saying put everything you have. Definitely don't put all your eggs in one basket, but
Right.
uh, participate in the asset class. It's a new asset class. It's just getting we're only at like 5% global adoption. So, we have a very bright future ahead of us. And for people that are willing to, do the education, work with an advisor who's competent in the subject, uh, they can see massive gains in the next, coming years and decades, just by participating in the growth of the asset.
Yeah, and it's interesting that you bring that up, because the speaker that we both were listening to at the conference said something very interesting to me. First of all, I never knew that this entire thing started with just a very generic email address of a guy that started this thing and essentially encouraged some people to get on the ground level of this. I think I've heard of Bitcoin, gosh, a few years ago. It wasn't anything. It was a few friends of mine that were dabbling with this, right? And I just didn't understand it. I didn't understand the asset class as much as you obviously do. But then just recently, the FHFA essentially put out a memo that they were going to start recognizing Bitcoin as a particular asset class, so that we can meet reserve requirements, so that we can obviously utilize on the mortgage side of the equation, right? And so, to your point earlier, adoption seems to be happening more so now than ever before. But would you say that a lot of people just don't understand it because, truth be told, I mean, new things just that don't make sense, usually are scary, right? So walk us through a little bit of the history of it because I think the history of Bitcoin would be helpful to also understand.
Okay, yeah. So the history that it goes back quite a ways. Um, so I don't want to take up all the time, but basically, Bitcoin, was has its roots in end-to-end encryption, which was invented at MIT in the late 70s. And then there were people trying to solve for like an e-cash or a digital payment system as far back as in the 1980s and 90s. There was an NSA white paper in 1996 that titled "How to Make a Mint." It's available online, and they were explaining how you can transfer value to people with these encrypted tokens, but they didn't solve a couple problems. One was the double spending problem,
Hmm.
and so uh, in 2008, October of 2008, Satoshi Nakamoto, which is a pseudonym, no one knows the true identity of the creator, released a white paper, the Bitcoin white paper, which is actually on my website. So, but it's everywhere on the internet. So, and he explained how he had solved the double spending problem, um, and some of the other issues that the previous people they're getting very, very close for years. So I don't think it was any one person. It was a collection of people that were trying to solve this problem.
Mm-hmm.
And eventually, you know, Satoshi Nakamoto did solve it and released it to the world, a non-commercial release. There were no investors, there were no shareholders. It was just put out there publicly. Anyone could mine Bitcoin and get the rewards. Um, and so it's a really unique story. Um, you know, how does something that has no commercial release, no advertising, there's no company behind it, it's not in business, why is it being adopted at this scale and to the point now where you know it's approaching, just Bitcoin by itself is close to a $3 trillion asset
Mm-hmm.
just by itself. The total crypto market, I believe, just crossed over $4 trillion. So in value. So um, yeah, when it first came out, people would just who learned about it, they would start mining it. They didn't even know how to price it. How do you send coins to other people? So there were, you would have to email someone or send them, some PayPal payment and then hope that they actually sent you the coins,
Right.
right? So then more and more people got into mining and and that started taking off. And then it actually so more than 50% of the supply of Bitcoins was mined in the first 4 years before the first halving. So every 4 years, the supply of new coins that gets released gets cut in half. So
Mm.
as the adoption increases, the supply decreases. And that's why, we went from, less than a penny to, we topped out recently at $123,000. And, you know, I believe we're going to go significantly higher.
Yeah. And it's interesting, to your point, one of the speakers that was, kind of talking about this in the conference that we were in had a very, very, very powerful statement that said, this could be the best time to invest in crypto, even at the elevated prices that we're seeing now compared to obviously when it started. And the more and more he unpacked that, the more and more, there was a compelling case to be made around this. Now, how does that though inform, your clients, understanding of this? Meaning, obviously, there's a lot of traditional ways to invest in real estate. You talked about diversification of the portfolio and how you've allocated some of Bitcoin within the portfolio of your clients, if they so choose to invest in this type of product, right? So, but how does the advice, around that, for people that are perhaps, A, don't know anything about, B, are worried, like what are some of the advice, what are some of the things that they should be perhaps reading or looking into that could inform their, their knowledge around the topic?
Yeah, there's so many resources online to learn about Bitcoin. Uh, I think Michael Saylor is probably the best and most well-known resource, but there's thousands of people that have been in Bitcoin for a long time, um, with really great content, great, um, uh, you know, factual details on, not just how Bitcoin works, but how money works. When you really learn Bitcoin, you've learned monetary economics. And that's really when you realize how powerful the implications are. Um, so usually when I bring up Bitcoin to a client, most people, they've heard the name. It's kind of a household term, but they really don't know what it is or how it works or why they should invest. So in many cases, when I first bring it up,
Mm.
there's some apprehension. It's still a little uncomfortable. But then, usually we might start with a more typical portfolio just without Bitcoin. Um, and then typically the clients come around and they say, "Hey, Mike, I've decided, I want to start with 5% or 10%. Some are higher. Some really, they get it. Um,
Mm.
but, and of course, there's several ways to own Bitcoin. You can do self custody, which is like, the ultimate
Mm.
economic empowerment. However, there are risks, right? You don't want to lose your keys, right? There's digital custody where a custodian will hold your Bitcoin in cold storage. Typically, they'll have some deposit insurance, so that's pretty safe. And and um and you still own the coins, so you can move them from the custodian to your own wallet if you want to spend them or hold them. And then there's the funds, the spot ETFs. There's um, all kinds of other, structured, buffered ETFs, but the spot ETFs are 1 to 1. Every share is equal a certain amount of Bitcoin. Those are probably the easiest way. Now, you don't get the economic empowerment of owning the coins yourself, but most people don't want that. They just want price exposure. And if you want
Mm.
exposure to the upward price movement, then that's a great way to do it. That's probably the method with the least amount of friction. And, clients aren't worried about losing their coins, losing their
Mm.
keys, losing access to their coins. So, there's a few ways to own it. And I go over that with clients and we determine how they want to own it, how much they want to allocate to it, and then we jump in.
Mm. It's interesting that you brought that up because I think, Bitcoin, to your point, has become a household name in the overall economy, but also, I mean, it's bled into other industries, right? I mean, housing being one of them, right? We talked at length, in our last conversation about how this could eventually, the implications of it in the future, right? But in light of that, and kind of in a similar topic, right? I mean, diversification is an extremely important piece that most consumers perhaps, don't necessarily grasp or understand completely. And that's why, guidance from individuals and professionals like yourself is extremely important. Um, How much though is, different asset classes, the advice that you're giving on those, a part of your conversation, specifically about, perhaps real estate in general, right? Like you and I talked about, how interesting Bitcoin and real estate have kind of parallels, right? I asked you, I said, one of the rules that, the real estate talks about is never sell real estate, right? And you say, well, in the same way, owning Bitcoin is kind of similar, right? Like imagine owning a piece of, I think you said New York City, right? Times Square, like a block or whatever. Would you ever
An
sell that?
acre, yeah, every Bitcoin is a digital acre in Manhattan. So you never sell.
Yeah. So there are parallels, right? I mean, that are bleeding into different interests, i.e. real estate, right? So can you talk a little bit about that? Kind of your thoughts on in terms of, okay, where is this going? Like, as it relates to, the real estate side of things. And then also talk about, the advice that you give clients in light of that, right? Like what advice are you giving them on the real estate side of the equation? Give us some insight there.
Okay, yeah. So real estate as it relates to Bitcoin has never been more affordable. The housing price priced in Bitcoin, and I could share a chart with you if we have time, but uh, the median home price in Bitcoin is less now than it ever has been. So, so if you price it in something that goes up in value, then real estate is very affordable. If you price it in dollars, which only go down in value over time, well, then obviously, there's some affordability issues and challenges there. But I do like real estate as an asset class, as an investment. I think home ownership is generally a very good thing. Um, I think every person uh, or couple should, you know, determine where they're at in their career, if this is the time and place to buy. But generally speaking, home ownership is a great thing, and it's led to, you know, massive amounts of wealth and equity being able to transfer to the next generation. So I think that's a great thing. Um, the I know that right now with inflation, with interest rates, uh, real estate, is more challenging. It's a harder purchase for a lot of people, but I think if they can, uh, you know, build the income, build the assets, and get into it in a way that's not going to make you house poor,
Mhm.
where you can still live your life, build equity, and enjoy life. I think it's a great asset to have.
Yeah, and you said it well. I think, making sure that you're being financially responsible with any type of investment, including obviously real estate, is critical, right? Aligning yourself with individuals like yourself, right? That are going to give them sound advice on all different aspects, including real estate, right? Is super, super critical. Um, and then doing it when it makes sense for you, right? So one of the things that I always tell clients is they're always asking about timing, like when is the right time to purchase a property? And I'm like, when it makes sense for you, right? Like when regardless of what the market is doing, like you buy real estate whenever it makes sense for you, whenever it makes financial sense for you, right? And understanding those components, I think are critical, right? Now, in our world, like most consumers, when they invest in real estate for the first time, second time, third time, they're constantly looking at maximizing the actual down payment that they're looking to put in, right? In other words, maximizing the amount of money they're looking to put down, right? So oftentimes what they'll do, if they're moving from a townhouse or their first home to the second home where they're going to park it forever, we talk about, how much money should they actually put down, right? Now, every story is different, every scenario is different, every single investment is different, but oftentimes one of the things that we talk about for first-time home buyers or move-up buyers or even investors is like, look, let's make sure that the guidance that you're getting for this particular mortgage is not isolated, but integrated with the overall plan that your advisor has put in place, right? And if you're not working with an advisor, I would highly encourage you, to seek guidance and advice from people like Mike, because those questions need to be answered. And here's why. Maybe Mike, you can comment on this a little bit. A mortgage oftentimes is isolated, right? Most people think about a mortgage and they think about payment rate, cash to close. That's important. But the other side of that equation is this, right? A mortgage is one slice of your overall financial picture, taxes, investments, right? Et cetera, right? And so integrating that plan within your overall financial picture is extremely, extremely critical. Can you maybe comment on that a little bit, Mike? Because I think a lot of times, consumers, buyers, sellers, typically isolate the mortgage and not integrate it within the plan that their advisors are putting together.
Yeah, I think that, obviously when we're doing a financial plan for clients, the mortgage is a major part of that, because um, we want to make sure that number one, they can they can afford the house, they can build the equity, but that they can also contribute to other assets outside of the home, right? For retirement accounts and brokerage accounts and anything else they want to invest in. So you have to factor in, and especially because it's for most people, it's the largest purchase that they will make, right? If they're not if if they're not in business, investing in, factories and equipment, then most likely your personal residence is the largest purchase ever. So it's very important to take time to see how it integrates with the cash flow and the financial situation. And I think investing just a little bit of time, talking to an advisor, making a financial plan, the benefit is, multiple times more than any time cost or the effort in creating the plan.
Mm.
So, because the clarity that someone gets on their total financial picture and how this, new potential purchase fits into that and understanding the, what it's going to look like, I think that's a big deal. And yeah, I would never want to see someone get into what they think is their dream house, but if they're getting into a really tough financial situation where their life isn't fun anymore because they're just servicing the debt, that I I would love to see someone get into their dream house and be able to thrive knowing that they purchased it right and going in with, eyes wide open, aware of their financial situation and how this fits into that and how it all works together.
Yeah, there's a great saying that says, in a multitude of counsel, there's wisdom, right? And I think what you're saying here is like, look, at the end of the day, you need to surround yourself with individuals that are going to help you not just manage, the asset class of the asset side of the balance sheet, but also the liability side of the balance sheet, right? But ultimately, people that are going to give you wisdom, right? And wisdom is literally knowledge in action, right? To your point, like everybody loves food with their meals, right? But if you're overstretching yourself because, hey, you want this beautiful home, right? But yet it's not blended with the overall financial strategy. You're not maximizing the contributions into your 401k plan. You're not, saving or putting enough money away for the kids' college education. I think we're missing big here in this particular arena. And I think aligning themselves with individuals such as yourself, and I would argue practices like ours, right? Where we look at the mortgage not just as a payment or rate and cash to close, but as an actual like instrument, right? To inform the overall plan for their life is the key. And now it's interesting to me, right? I've been doing this for a while. A lot of people are nervous about coming, to talk to advisors or to get, help. They're nervous because, perhaps they don't have a lot of their ducks in a row, right? Perhaps they don't have all of their assets correctly diversified, right? What do you say to them, like Mike? Like what do you say to them, like, look, my God, I don't have, $2 million to invest, far from it. I probably have about 300, 450, that isn't over or diversified in different assets, and with different people. And I'm nervous about talking to someone like you, right? Or I'm managing this myself. Like, give us some advice around that piece, for those individuals that are perhaps, concerned about that question.
I think I think the sooner those people have a conversation, um, and talk about those concerns, you can put it out on the table. You can break it down. You can start figuring out where and how the mortgage best fits into the overall financial picture. Um, so I would say don't be apprehensive about getting advice. There's so many good people giving good advice, and as long as you're working with someone who is competent and confident, and who has a good track record, and you can always shop around, get a couple different opinions,
Mhm.
but I think that I would advise people to dive into if there's an uncomfortable question somewhere, dive into the discomfort. You know,
Mm.
that's where you can solve the problems. And in many cases, maybe a client thinks that the house might be, maybe it's too much house. Maybe they're worried, but maybe they actually can afford it and still build their other assets, retirement plans and college funding and all the things that are crucial to the success of the family. Um, you know, look at it. Don't put your head in the sand, right? Let's roll up our sleeves and see if we can come up with a solution, because I think in many cases we can.
That's such good wisdom, because I think, oftentimes people say, well, I don't even know what kind of questions I should be asking. Well, thank God that we have ChatGPT and Google, right, to assist. I mean, there's plenty of platforms where you can literally, say, hey, what are some of the questions I need to be asking in this season of my life, right? But to your point, I think, one of the things that you and I are aligned with on a pretty high level is process, right? So, I think doing your due diligence in this area of your life, super critical, right? Like, making sure that whoever it is that you're aligning yourself on both the asset side of the balance sheet or the liability side of the balance sheet, i.e., your advisor, your financial advisors, or your mortgage advisors, is super critical. Making sure that you do your due diligence, making sure you ask the right questions, but also pay attention to process, right? Like, because everybody in our worlds, have a unique pitch, right? But where's the proof, right? Where is the actual step-by-step process? Where is the actual a sequence that you're following so that I can see the outcome, right? And I think, as we do our due diligence as consumers, that's one piece that I think it's super, super critical when assessing who you should align yourself with. Any comments on that, Mike?
Yeah, I mean, this is where I think we have a lot of alignment, because um, I'm all about the process. I feel like a lot of advisors, and maybe it's true in the mortgage business too, they sell the individual, they sell me, right? Um, I want to sell the approach, the process to how we're going to solve this problem, how we're going to grow your assets. Um, and I want to show the clients, step by step as we take them through that process. Number one, it's very, very low friction. I would I would say the goal is to be frictionless as much as possible, because a better process not only is better for the clients, but it's better for the advisor,
Mm-hmm.
because I can serve more clients with a better process. Also, the clients can ask questions, they can get more involved. So having a process in place that enables us to deliver more value is huge. Not only for customer satisfaction, but when it comes to operating the business. We want to be efficient, we want to be effective, and the bottom line is, we've got to help solve the problems that the clients are paying us to solve, right?
Yeah. Yeah, and that's a good point, because I think, associations matter, right? Like alignment matters, right? Process matters. And, I often find it very interesting that the majority of people that look to invest in real estate, for example, start their search online, but 80 something percent of those individuals get a referral from someone they trust because there's alignment, there's process, right? Included. And we refer clients to our real estate partners, our real estate professionals, our real estate agents that are vetted, that are actually doing business, right? That are not just talking about the last award that they received, right? Where the majority of people are receiving those awards, but they're talking about the results that they're bringing to their clients, right? We have agents in Fairfax, we have agents in in different markets, right? The agents that are moving the inventory. In the same way, we have partners like financial advisors, people that specialize in certain things, Bitcoin being one of them, right? Hey, why don't we talk to someone that actually is doing this, that's actually invested in this themselves, and get guidance and see if there's alignment there, for yourself. And so I think that point cannot be emphasized enough, because at the end of the day, we want to make sure we align ourselves with the right party.
Absolutely.
One of my mentors once said to me, people don't care about what you have to say until they see passion behind your words, right? Like, so people follow passion. He said they buy passion, right? They look at the
Yeah.
passion, right? And so the fact that you have exposure and are not just talking about it, but is actually doing this, there's definitely a draw towards that. And I would argue very few people, have that kind of draw as it relates to topics that are a little bit nebulous for now.
Yeah.
You know what I
Yeah.
mean? With passion. So
People don't care how much you know until they know how much you care, right?
yeah, absolutely. Well, Mike, this has been an incredible conversation that I think has brought so much value to our audience. What is the best way, to get in touch with you? Like, what is the most efficient way to get in touch with you if someone wants to hear more about some of the things that your firm offers?
Yeah, my assistant is actually setting up a workflow right now with a scheduling link where people can just click the link, put in whatever they want us to work on, and book an appointment. But until that's up, right now they can go to my website, www.aeadvisors.io, and there's a contact us, and put in their info. My phone number's on the website, my email's on the website. They can fill out the online form either way, and we're happy to get in touch, and we're happy to see if we can make an impact for their situation.
Awesome, awesome. Well, thank you so much again, Mike, for your time, and we look forward to talking to you again real soon.
All right, thank you.